scaled new records in 2022 amid global uncertainty stemming from a looming recession in the developed nations as well as the Russia-Ukraine war as well. Clearly, with all of this said and done, we have Nifty as well as Sensex, which actually managed to hit all-time highs of, I think, 18,887.6 on the Nifty and a 63,583 on the Sensex as well. Taking all of this into consideration, what's going to be in store for 2023, as today is the last trading day of 2022, and it seems we are pretty much in a good shape. Joining us on the show to discuss the nitty-gritties, we have Dipan Mehta, founder director at Elixir Equities, and Chandan Taparia, head technical and derivative research at Motilal Oswal, joining in. Welcome to the show, gentlemen, and I'm Hiral Dadia.
Thank you, and all the best for the new year, Hiral.
Thank you, Hiral. All the best, and Happy New Year in advance.
Absolutely. Happy New Year to all the viewers in advance as well. Dipan, let me take my first question with you. Clearly, in the year 2022, we've seen the Nifty almost touch near those 18,000 levels. And Sensex as well, we've seen a new high. Now, in spite of the net outflows of FPIs, we've seen a positive trend in the Indian markets. And this was mainly thanks to the DIIs who have been net buyers. The year has been full of political, geopolitical policies, as well as inflation-related issues. How would you actually sum up the year overall from your perspective?
It's a very good question to start with. And actually, it's one of the most unusual years in my entire career, where one after another, there were bouncers, right from geopolitical event, the war in Ukraine, and then there were the supply chain issues, semiconductor shortages, then commodity prices went berserk, and then we had the rate tightening measures by the central bank across the globe, to the extent they want to take those large global economies into recession just to cool off the inflation. And all of these negative factors came through, and frankly, I would have given up and thrown in my towel and expected at least a 15-20% type of a correction in our markets. But that did not happen. And it is all thanks to the resilience and I would say savviness of the Indian investor. And a lot of it's also with the government policies, because the way that we emerged out of COVID, we emerged really strong as compared to many of the other economies. And the retail investor kept his faith in Indian equities and in the India story, which is why there's hardly any damage caused by these geopolitical events. And I talk from experience because I've seen 2000, I've seen 2008 also. At that point of time also, and even before that, when there was the Gulf War, I've seen a lot of these geopolitical events, these rate tightening and rate easing effects, financial crisis. And at each of those situations, our markets were in total disarray. But this time around, I'm pleasantly surprised. And that's why I said I think this is a very unusual market, and I hope this is the new norm.
Absolutely hope this is the new norm. In fact, Chandan, coming to you as well from a technical perspective, did you really anticipate markets touching record high levels that we already saw in the recent past?
Yeah. So like if I sum up the entire 2022, on year-on-year basis, we are just closing with the gains of around 5%. If I look at the last 12 months, out of 12 months, 7 months were negative, 5 months were positive. So net to net, we closed with some gains. But the good part is the declines were being bought. This year has been very volatile in a range of around 3,700 points. During the year, we drifted to 15,200, but we managed to hold. When it was near to 17,500 or 16,800 zone, we were expecting it to hit the new high, and exactly it did the same. Now we see the recent bottom that is near to 17,777 is going to be the firm bottom to commence the next leg of rally. So right now we are hovering near to 18,200. We believe that last year also was the year of the buy on decline stance. We recovered well from the lows, but this year should make the higher base. So we believe that 17,777 is going to act as a key support as of now. And we are expecting market to head to us 18,442 to 18,500 on immediate basis and 18,887 to 19,250 on positional basis. So overall, buy on decline stance could continue for the Nifty because volatility is falling down. Your selective sectors are doing well. in this year when Nifty was only up by near to 5%, your bank Nifty has rallied well by 20%. So I believe that banking, financials, selective auto, metals could lead the momentum to get the positive stance and rally in next coming year.
Absolutely, and hoping this momentum continues as well. Dipan, coming to you overall, we already spoke about how 2022 as a year has been. Now, coming to 2023, there is still slight bit of a looming threat with regards to a global slowdown, and mainly owing to the sharply tighter monetary conditions. Plus, on top of that, you have the Indian economy that continues to show strength in several areas. Secondly, if you see from a valuation perspective, that seems to be rich everywhere, because if you see the Nifty forward multiple as well, that's higher by almost around 15 to 20%. And the third factor that we should be considering now is the higher borrowing costs. Now, taking this macro picture into consideration, what's the sense that you're picking up for the markets?
See, I think, markets do not follow calendar cutoffs, and whatever we saw, whatever we are experiencing, and whatever variables that we are dealing with today, they will continue on 1st of January and beyond. So it doesn't, change colors as we change the seasons or the months and years change. And it's going to be the same thing. I think that investors are going to fret about US and Europe getting into deeper recession, further tightening over there. And there could be an error on the part of global central banks, and they may tighten the monetary policy too much. And then inflation suddenly starts to come off, and then they have to change their stance. So we are living in unusual times and in uncharted territory. So that's one part. But more importantly, I think less and less I'm thinking about what is happening globally, and more I'm focusing about what is happening in India and which are the domestic sectors which will be winners for the next year. That's where I like to spend most of my mind space. And I feel that with the exception of commodities, you can make out a bullish case for almost every sector in India. And if you have a contrarian view, then even software looks interesting at this point of time, and with the way the correction has taken place. So I would just say that there are so many beautiful investment themes playing out in India, and there are so many opportunities. There's so much of diversity in our markets. We have a vibrant primary market also, and some very interesting companies that got listed. So there's a lot of choice for investors. And I think that if you buy sensibly after doing proper research in terms of your understanding of the stocks, then 2023 could be a real fantastic year for portfolio investors, especially those who have a long-term outlook and those who are focused on growth-oriented stocks.
Right. So with all of this said and done, if you have to take the negatives into consideration as well, clearly, there has been a distinct bias towards what's happening now. Do you think there is a possibility of an earnings downgrade rather than an upgrade that could come in? And this could be obviously in select stocks and sectors as well.
See, I don't think that the chances of an earnings downgrade, with the exception of maybe software and some of the other externally focused sectors and commodities, I don't see that much scope for an earnings downgrade, but it can happen at any point of time. And we will take steps accordingly and change our strategy accordingly. But the real risk factor in our market still remains some major crisis globally. I'm not talking of what we have dealt with so far, that's geopolitical or inflation interest rate, but something out of the blue, which happens. Could be a further escalation of war in Ukraine, or could be another geopolitical event around China. All these threats are there. We live in a dangerous world. So these threats are there. And because of the way the central banks have tried to tighten monetary policy and the way the cryptocurrencies are moving, you could have a failure of a very large, important organization like what we saw in Lehman. And that can have its ripple effect all through the world. And then what you would have is a risk of trade globally. And then when that risk of trade happens, you see concentrated selling by the FIIs without taking cognizance of the fundamentals. And that can, take our markets down. So in my opinion, the threats are all external to our markets. There are no material internal threats at present. And in fact, the way the Indian economy is doing well, I would say that this is the best ever foundation and the best ever trends which I have seen in many, many years.
Right. And with all of these trends said and done, Chandan, coming to you from a technical perspective, what levels do you think we should be actually tracking on Nifty and Sensex from a 2023 perspective?
Yeah, so when we talk about the levels, recently the Nifty made high of 18,887. And just a couple of days back, market witnessed good recovery from 17,777 marks. So on immediate point of view, first I look at 17,777. If that level is not respected, then only I'll consider this market to turning more weak. And that scenario, your direct level goes to 17,250. While on the upside, if it manages to move over 18,442, which we are expecting, then we are looking for the fresh leg of rally, which will take it to us 18,881 and 19,250. So as of now, we are considering the range between 17,250 to 19,250. In between 17,777 to 18,881 is the narrow range, and in between 18,442 is an immediate barrier. So I'll keep all these levels ready to get the immediate positional and monthly, week, quarterly kind of trade setup in the Nifty index.
Right. So, Chandan, a lot of people are talking about Nifty testing 22,000, 23,000, probably Sensex testing levels in that range of 65 to 70,000 again. How big a possibility is that on the charts? From a technical perspective, do you really see that happening?
Yeah, so see, as of now, the setup is quite bullish. If I look at the monthly, weekly chart of the Nifty, we are witnessing a breakout from its pole and flick pattern. If I conclude it technically, then the rally started in March 20 when Nifty was near to 7,500. And this rally extended to October 2021 when Nifty made the high near to 18,600. And after that, almost 10 to 12 months market remained consolidative. And that formed a typically technical textbook pole and flick pattern. And already the breakout happened in October month. And recently it has retested that breakout. Why I am talking about 17,777? Because this is also the high level made in the budget, high made in the Diwali. So I believe if market respect the same towards the budget, then we are looking for first 19,250, and then this rally can even extend to 20,000, but that will be towards the end of this year. So I think let's look at the immediate level as of now. But yes, technical setup is quite bullish, which is giving the scope of 10 to 12% or 10 to 15% from upside from the key support zone.
Right. So those are levels from a longer term perspective that we could be tracking, taking the setup remains the same as well. Dipan, coming to you, as you already mentioned right now, yes, all eyes are in terms of the domestic economy, taking into consideration the external factors, we can keep them away, right? Now, from a domestic market perspective, again, if you have to pick up sectors, the focus is on sectors which are not really export oriented, sectors which are driven by domestic consumption, right? So what would those sectors that you would actually bet on for 2023 be, taking the buy on dip strategy into consideration?
I think first sector has to be banks, and investors need to have at least 25, 30, maybe even as 40% of their portfolio in banks. You could buy 4 or 5, even more number of banks, depending upon a risk appetite. You could go for the large private sector banks, or even some of the PSU banks. I think they are in a good trading zone at this point of time, looking quite interesting. But you need to have at least 35-40% with banks and NBFCs put together. And I think this is a Cinderella time, as Uday Kotaka described, for the banking sector. And certainly investors should ride this wave up till the next round of NPA cycles start to happen and balance sheet quality starts to worsen, which may be a couple of years away or so. But next 2 years looks a good runway for banks. The second sector which comes to mind, which is not adequately discussed in media, is capital goods and engineering construction companies, the likes of Larsen and Toubro, ITC, cementation, and even electromechanical or electrical companies like ABB, Siemens, Honeywell. I think they're all reporting very good numbers, excellent growth in order book position, and clearly multi-year upcycle playing out in the capital goods sector. So that's the second industry that we are focused on, we like. And then there's the entire consumption pattern. And in consumption pattern, I'm not talking about FMCG, but non-FMCG industry. Could be auto, could be real estate, retail, quick service restaurants, hospitality, healthcare. I think the list goes on and on. And each of these sectors, you pick the winners or you pick the large companies. I think your portfolio should do pretty well in 2023.
Right. So, Dipan, would you advise to start, buying right now on dips, or would you say still wait for the earnings to start, trickling in and stay put till then?
I'd go with the latter strategy. It's better to take a more informed, opinion of a stock, and that's best done after the earnings are out, because there is a lot of stock-specific volatility around the earnings season. So I'd wait and watch till at least middle of January, and then start to buy depending on what the companies have reported.
Right. And overall, again, if you have to go sector specific now, Pharma has seen a good run over the last couple of trading sessions as well. Anything that you would add in terms of Pharma as a sector and any picks from that space?
No, see, in Pharma, you have to be extremely selective and look for companies which are domestic oriented or are engaged in contract manufacturing. So, or something which is quite at I would say, very attractive valuation, like say a Gland Pharma, which has seen a significant correction. Whenever the turnaround comes over there, we can't say, but it's a solid company, very good track record. And then there are domestic focused companies like the JB Chemicals, Iris, I think, which will benefit from rising spends on healthcare medicine. And then you have the larger companies like, say, a Dr. Reddy's or a Cipla. But I would say that it's best to be neutral to slightly underweight pharma. There are so many sectors and such a vibrant, choice when it comes to consumption-oriented stocks. So I'm more active in those stocks than looking at the traditional sectors like pharma, steel, cement. I think those are all mature industries, and the real fun, the real wealth is going to be created in new generation industries. And I'm buying even platform companies, the new digital companies. I think they may also have a good year.
Right. But when you talk about the new digital companies as well, there has been a lot of beating around happening on the stocks, post the listing. So let's look at the technical side of it. Say, for example, you take a Nykaa or a Paytm. Chandan, what would the charts, according to you, tell you for a Nykaa and a Paytm?
So, when you talk about these companies, the trend is clearly negative. If I talk about the Nykaa, this stock is corrected by more than 56%, right? Some corporate action was also seen. Overall, the stock is making lower top, lower bottom formation on all the time frame. Even if I look at the weekly scale, the stock is gradually falling down. So it's very tough to catch the falling knife, especially when the trend is negative. As of now, I only can see the immediate support near to 140, because that is the recent trading bottoms. But it is very tough to find out where the momentum will be there. So I'll, as of now, look at the hurdle near to 170. If it moves above 170, then only look for going for some bounce. Otherwise, I can avoid the name. If I talk about Paytm, this stock also in pressure, but the good part is recently it has bottomed out with multiple support of around 440 levels. And the good part is that in last 4 or 5 days, the higher base is being formed near to 470. So here some scope is there, but let me tell you, these are the counter which is volatile. Major trend is negative. Already seen the decline from high level, so bounce back is visible. If you talk about the levels, if it sustains above 555, I can see a decent bounce towards 600 to 620. But if it goes below 500 level, then you need to liquidate your position. So 500, 555, 600, 620, these are the key level to watch for some bounce back move in the counter, even after being the negative, major trend as a negative in the stock.
Right. So that's with regards to the new age companies. Dipan, between the new age technology stocks and the seasoned players from the IT sector, right? Now, overall, if you see in terms of IT companies as well, there is a lot of bottom picking that has started to happen. Where would your bets be?
Within IT, we prefer mid-cap IT, especially companies which are focused on verticals, interesting verticals where perhaps they have got an edge, a competitive edge over there, and the chances of a slowdown in spending is little less. usual disclosure, we and our clients may be invested companies like Persistent System, KPIT, Tata Elixir, and then there are some companies, mid-cap companies, which are extremely aggressive when it comes to marketing, like Scoforge. And I'm particularly very optimistic and positive on the merged entity, that is LTI Mindtree. Both these companies had exceptional growth rates, much higher than the industry averages. And the real concern with them was time concentration. And now that worry certainly has eased with the merger of two companies. So there are 5, 6 interesting companies in the IT space. And whenever the sector turns around in terms of sentiment and in terms of higher tech spending, I think mid-cap IT companies should do exceptionally well. Within the large cap space, we like Infosys because of again aggression when it comes to catching new deals and going after business. So that's the broad spectrum that we're looking at.
Right. And Dipan, Chandan, coming to you as well from the IT space, from a technical perspective, any picks that you would recommend?
So first, if I talk about the Nifty IT, in this year when your Nifty is up by around 5%, bank, metal, auto has performed. Nifty IT and Pharma are down. Nifty IT is down by more than 25%. However, most of the IT counter have witnessed some sort of stability from a selling pressure, but the concern is follow-up activity is totally missing in this space. However, the IT was following mainly to the Nasdaq. That also recovered, but Nifty IT gone stuck in a range. So if I talk about the sector-wise, then I'll be looking for range-bound bias with some bounce, not much aggressive stance. But if I talk about stock-wise, then I'll totally focus on the heavyweights name like TCS. The recent price pattern indicate dips and then holding of the support zone. This stock only corrected by 10% against the sector fall of around 40%. That is also giving some sort of relative strength. If I look at the monthly chart, in last 2 months, we have seen good recovery. This month has been consolidating with some decline. So I believe that now support of 3050 or 3100 zone could provide the cushion to take it to us 3450 to 3600 zone in TCS. So I'll be looking for TCS if you talk about IT as a whole to pick any stocks to diversify the portfolio.
Right. So that's with regards to IT as a space. Dipan, overall, PSU banks, a 70 to 75% return that we've seen in 2022, and still a lot of bullish views coming in overall with regards to private as well as PSU. Seeing the way the credit growth has been panning out from here on, and also the way deposit growth has been panning out, how are you seeing the Indian banking space as a whole? Because it's a complete turnaround story over the last 2 to 3 years.
Yeah, we discussed earlier that we're very positive on banks per se. And I think these are absolute blue sky scenario for bank stocks, where they are seeing decent growth in credit. So because of more lending, they are benefiting from fee-based income also. And NPAs are low, so that the cost on that count, provisioning costs are lower. The only niggling matter is higher spends on salaries, technology, and losses which they may have on the trading side, GSEX. But broadly, I think these are great times for banks, and we will see banks again, Bank Nifty, be the leadership index and the leadership sector in 2023 as well.
Right. So very lastly, overall, if you had to give and suggest 3 stock picks for 2023 that could actually be, growth drivers or multi-baggers, if I may say so, what would those picks be for you?
No. We don't. We cannot predict multi-baggers just now. So that is out of question. But as I said, go with the banks. I think this year may be good for HDFC Bank. That merger will get formalized, and you could see uncertainties around that merger evaporate, and these stocks can come back into reckoning. We like auto companies, especially Mahindra and Mahindra. That could be a decent performer. And last but not the least, Larsen and Toubro is one of our top picks. So I would go with these 3 large companies. I think it's best investors stick to nice large cap stocks.
Right. Absolutely. So these are picks coming in from Dipan. Chandan, from your perspective, what would your recommendations be?
Yeah, so I believe in this market, selective private PSU banks, few financials, auto, fertilizer, and metal stocks are likely to do well. If you ask me one pick or couple of ideas, then first I'll focus on State Bank of India. SBI has rallied well by more than 34% in this year. Even in 2021 also it rallied well. Major trend of the stock is positive, and I'm quite impressed with the V-shaped recovery of last 3-4 days. Earlier the stock is corrected from 630 to 570 zone. The way it has recovered and now holding well clearly indicates that outperformance is visible from this entire sector and from this counter. So I'll suggest to accumulate this counter in between 585 to 600 zone. We have major support at 550, and there is high potential that this stock can move to us 666 to 680 level on the upside. Apart from SBI, I'll focus on auto name, including TVS Motor, one of the strongest counter in auto space, which is up by around 75%. Even after some decline from higher levels, we have seen good base formation near to 1,000 marks, and the stock has also given a decisive breakout about 1,050, 1,065. So when it declines to 1,050 to 1,060, the buying opportunity with support of 1,000, and we are looking for an uptick to us 1150 to 1220 kind of level in TVS Motor. So I'll talk mainly two names, SBI and TVS Motor, if someone is looking to add in portfolio or looking to go for trading ideas for slightly medium term point of view.
Absolutely. So those are great blue chip names coming in from Chandan as well as Dipan for 2023. And we have lots to look out for as well in the new year. And as Dipan mentioned at the start of the show itself, there are a lot of uncertainties. It is unpredictable, but we've been doing pretty well as compared to other markets. Thank you, Dipan. Thank you, Chandan, so much for joining us on the show. A pleasure to speak to you. Happy New Year to you and the viewers in advance as well. And speak to you soon again.
Thank you.